Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 5th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I am here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, not so much. I mean, we did get final services services PMI across the pond, but remember, we only really look at their flash estimates. So they did come out with the services PMI for Italy and French. Those came in below below the 50, which is contraction in the economy. Now, like I said, this isn't the major one to look at, but it is interesting to note that we had a couple of those pinging in up below 50. PMI, anything above 50, expansion. Anything below 50 is contraction. Here in the United States, we got our own ISM, which is the Institute for Supply Management, non-manufacturing PMI, which is the service sector. This is our major number. We don't look at the flash estimate. We look for the Institute for Supply Management. And it came in at 56.7, slightly lower than the expected 57.2, and one of the lower readings we've had in the last several months, to be quite honest. Also, something to note I forgot to mention yesterday is China has a bank holiday basically all week. So we could really see volumes very light throughout this week, which will kind of fall in line, I believe, with my market assumption of us kind of settling down in and around these points of controls. We may break away from them for a little bit. For the most part, I think we're going to ping back and forth. All right, we've got crude oil showing a little weakness. Now, we've been showing builds over than expected the last couple of times. That should give weakness, plus the fact that we're seeing the economic data points not coming in as good as we would expect. All of those things should cause crude oil to come off because of lack of demand or the future outlook of slowing demand for crude oil. So I'm expecting crude oil to start rolling over a little bit, trading, maybe even go down and test that 50 handle. I don't think that we're necessarily into the 40 handles for foreseeable future or anything like that. I really believe that we are going to ping back and forth between the 60 and 50 handle and really just settle down right in and around these mid 50s. And I've been saying that for I don't even know how long, a couple months now. All right. So gold futures, we've talked about this, getting overextended to the upside, breaking through the value area high, starting to show a little bit of a topping pattern. We got confirmation the last couple of days. Today, we've got a bit of an inside day for gold, and this value area high is acting as more of a support than I was expecting. I thought we would really not really see that act as too much of a support because the Fibonacci being right above that. I think what's happening here, though, is that because that 9-day moving average is coming up, that's acting as support as well, and it just happens to coincide with the value area high there. So that could be part of that as well. I thought once we kind of peeled through and back into the value area, we would start moving back towards the point of control. Not really seeing that just yet. All right, we've got bonds moving higher today. Again, they don't really have a whole lot of room to go. You know, moving higher means rates are going lower. I don't think that rates are actually at a point where we are looking to lower interest rates. We're still seeing expansion in the economy here in the United States. Across the pond, a little bit sketchy with France and Italy, but we really have to worry about French on the manufacturing side. France and Germany are the major manufacturing sectors of the European region. So those are the ones we really need to look at for that. So I'm not too concerned with the service sector pullback in France. All right, but bonds moving higher today by about 23 ticks. Again, they don't really have a whole lot of room to move anywhere. VIX down into the 15 handle today. This isn't boding well for us premium sellers. going forward in the near future, other than we have earnings today and earnings this month for the most part. So hopefully we can get through this earnings season, take advantage of the high implied volatility, and then have volatility return to the markets without binary events, so we can continue to trade the way I love to trade in selling premium. All right, the Dow Jones Industrial Average up over 125 points right now. Testing that value area high. I think it's going to get overextended here and start rolling back over again, like I've mentioned, to the point of control. This is looking very toppy right now. Again, these markets can really move just about anywhere on lack of volume because China's not in there. But I think that we're going to kind of see this settle down really in and around the points of control for these equities. All right, we've got the Nasdaq piercing above the 38 Fibonacci extension. You know, a settlement above there would be a big coup and really kind of put a kink in my theory of us hanging out right here. It is going to be close. It could go up and test these Fibonacci's as well, even if we stayed up there. You know, we've got the 200-day moving average should act as resistance as well. So a lot of overhead resistance above us and a magnet just below where we're trading. The magnet being the point of control. That's where the market really kind of pulls the markets back to those areas where the most time and volume has been spent. All right, E-mini S&Ps on the daily chart here. You can see they tested the 38 Fibonacci retracement as well. This, again, lining up in and around the point of control. I think with the lack of volume and stuff, you can see the lack of volume really starting to come out. Most of that being with China not being involved as well. Daily chart of a breakdown of the daily chart. You can see here each blue section is a day with the overnight included. And then each candle is a 30-minute candle. You can see off the open, we really started rallying. Seeing a little bit of weakness now on some of that data. I don't really think it's enough to really cause a whole lot of fear into the markets to push these things lower. But we have had several days of just moving higher where some of these weak hands may very well want to start to cover. So the next couple of days we could start seeing this market kind of roll over a little bit for that as people start to take profits on these trades. All right, the only thing I've done, and I actually forgot to actually send this tweet out. It was stuck in my tweet box. I got a phone call when I was going to tweet this out and just never did it. It was about a 2-hour phone call and totally forgot. So sorry about that. But Google played to the upside. I mean, if you ever seen me trade Google, Amazon, and probably even Facebook, I only play those to the upside. So I played this one to the upside as well and did the February weeklies in there to try and get that massive theta decay coming out of it. So I usually go very tight, the closest to expiration on any of these earnings trades. If I can get into those weeklies, I will do that as well. And I went into the February, sold the February that expire on Friday, and sold the 165 puts in there for what was it? For I think it was $3.95. Was able to buy those back this morning for 80 cents. So a nice little trade there. I did that really small though. Also, you know, it's such a big stock that I, did it for about a little less than a half of a normal tranche on this trade, which ended up being kind of equal to the risk and reward that I'm looking for any trade out there. So that worked out quite nicely. And that's it. I'm trying to cover a couple of other things like McDonald's is quite a ways away. A couple of other ones. I just put in working orders. McDonald's looked a lot better this morning. So I put in a trade, a GTC in there to get out for a double, which I basically did those for 76 cents. I bought those calls for 76 cents. I'm trying to get out for about $1.50. And it's a little ways away. I just figured I'd throw that in there in case something crazy happened while I wasn't keeping my eye directly on it. So I took that one and put that in as a GTC. That's about it. Keeping an eye on a couple of other ones that, IWM, I got GDX, Morgan Stanley. They aren't looking great, but at the end of the day, we've had this market push a little bit higher than I've expected. I was expecting us to settle down closer to the value area. or the point of control, I should say. So I think that that's going to still happen. Haven't changed my market assumption, so I'm still okay with those trades. The IWM is just very close. I'm short the 152 calls, and it's in the 151 handle, which is causing that to, increase in value, obviously. But only 10 days left in it, so I think we're going to start seeing some of this theta decay really start to help me out, despite the fact that I might be somewhat directionally wrong on this trade right now. All right, that's it. Today, later on, I'm going to be at the Festival of Traders talking about volatility. If you guys want to know how to get in and out of these trades like I do quickly, the best way to do that is to know value, whether it is undervalued or overvalued for any type of situation. And I'm going to go into detail as to how to figure that out so you can quickly discern whether or not you are implementing the appropriate strategy around that kind of volatility. All right, so go to protraderstrategies.com and sign up for that Tiger Chart Trading, which is today. I'll be going on at about 4:30 Eastern, and then on Thursday, we're doing a webinar on the short put spread. So check that one out as well. All right. So if you can't take that, take it easy.